Minimalism is all over our culture. Originally is an American movement in the visual arts and music, originated in New York City in the late 60s, and gradually evolved to something bigger than just a simple taste of art and penetrated into all the sectors of our daily life. Eventually became a way of thinking about life. We have dozens of books, documentaries, podcasts, and even YouTube channels dedicated to in-depth understanding of minimalism and how it can improve our lives. The whole motto of minimalism, less is more. It is about freedom. Freedom from your debt, freedom from not buying things that you probably don't need, and freedom from actually enjoying the life it meant to be enjoyed. I personally believe that everyone can use some minimalism in their lives. But money does not just appear in our pockets, wallets, bank accounts just because we are minimalists. Unless you're a brand selling minimalism items. And moreover, minimalism also can be applied to your personal finance and investing. For example, you can replace spend money on things that you don't need with contribute a small amount of money to your investment portfolio with your every paycheck. And in this video, I'm going to share with you how you can set yourself up financially for the rest of your life by showing you 3 investments to automate your finances and making your money work for you. Just be aware though, investing is never about getting rich overnight. There is no magic pill out there that can be applied to investing. There are no shortcuts. So here's my portfolio on Questrade and what I currently have. It took me a while to get here from $0 to $140,000 portfolio value, which is great. This is a lot of money. It's not necessarily a life-changing amount, but I'll get there. Currently, my portfolio generates around $6,000 in dividends alone per year. This is crazy. And that's roughly around $500 per month in just pure dividends for doing nothing, for just holding the stocks, holding the dividend ETFs that keep generating me this dividend income. And my investments are on autopilot. They keep growing every single month, every single quarter with the share price appreciation and also with all the dividends being reinvested back to the stocks, aka DRIP. Sometimes I wish I can go 10 years back and explain to me when I was a 20-year-old how investments work. So if you follow the steps in this video, you can have a portfolio that is bigger than my current portfolio and you can get faster to your financial freedom. And of course, I realized there are a ton of information out there already about investments and there are a ton of YouTube channels that talk about it. And in this video, I'm not going to sell you a course. I'm not going to ask you to download anything. I'm not going to sell you a book. This is not a paid sponsorship. I'm going to earn $0 for sharing all the information I'm going to be sharing today. I get a lot of questions asked. What do you think about stock X? If the stock Y is going to be paying dividends, they're going to cut their this. What do you think about this ETF? What do you think about that ETF and all that? And most people do not have time to understand the nuances and in-depth details of the stock market, which is totally fine. You can count on me. I get you back. So here's the secret. There are 3 investments you need to care about. Canadian and US stock market, international stock market, and bond and REIT ETFs. I'm about to break it down step by step. What to buy, where to buy, how to buy it, and how it all actually works. Let me ask you this first. Do you want to retire later at the age of 60, 65, maybe 67 with more money? Or do you want to retire earlier at the age of 40, 45 with less money? I'm asking this because I've chosen the route where I want to retire earlier but with less money. That's why I've chosen this approach of dividend investing in the first place. And I'm gonna hold most of my stocks, ETFs, most of my dividend stocks and ETFs in my portfolio for the rest of my life, just because I'm making money off of them every single month, just because I'm holding them in my portfolio. Right now, I'm getting paid roughly $500 in dividends per month. And you would think that's not a lot from a $140,000 portfolio, but originally I only contributed this portfolio $100,000. The rest $40K came from the share price appreciation, from the dividend reinvestments. That makes a dividend yield of this portfolio at 6%, which is a great deal. I'm gonna keep doing it, and that's my plan for the future. If you are interested, like this video and let's keep going. And I'm pretty sure you noticed that I have a lot of stocks in my portfolio. I keep managing them, I keep analyzing, keep researching more, adding more, investing into more stocks, increasing my positions in the current stocks. I decide which stock is gonna be better for my portfolio and all that. And you would think you would need to do the same. But it's not necessarily true. You can avoid all of this and make your portfolio hands-free. If you do not have time and energy to allocate to maintaining such large portfolio, it's totally fine, as this video is about indexes and index investing, and you can recreate the portfolio that I currently have, but with only 1% of work on your part. Basically, it's gonna replicate, and in some cases gonna be even better on your part than my current portfolio. I'm not a financial advisor, I'm just a YouTuber here. So the first one is Canadian and US stock market. VDY.to by Vanguard might be a really good option for a dividend ETF for you. I totally have it in my portfolio as well. I love it a lot. It has a pretty good yield right now as a 3.86%, which is pretty good. You're diversifying yourself into a lot of stocks at the same time. And VDY, it's an ETF that invests into the best 39 high dividend stocks on the Toronto Stock Exchange. Their expense ratio right now is at around 0.20%, which is pretty low considering this is a passively managed ETF. I know it's all sounds very complicated, but let me break it down. So right now, every share of VDY costs around $39 to $40. It depends when you're watching this video. When you're buying a single share of this ETF, you're actually buying 39 other companies that they have in their portfolio. So you are invested into 39 companies from get-go, which is great. This is an amazing diversification tool for your portfolio. Did you know that S&P 500 index actually grew by a lot in the last 20 years, and 75% of its growth is only because of the dividend reinvestments? This is just crazy. And the more you reinvest your dividends, the better it's going to be, the faster it's going to perform, and the faster you can retire and start living off your dividends and start, enjoying your life finally and start traveling and all that. Another dividend ETF, a really good one that you might want to consider, is XDIV by iShares. It has a very beautiful MER expense ratio of 0.11%, which is one of the lowest out there for all other dividend ETFs on the Canadian stock market, maybe even US stock market. It's pretty low. And the yield they currently have is around 3.93%. They're also paying their dividends every single month. And this ETF is sort of a recent addition to the Canadian stock market. They've been on the market for the last only couple of years, but since then they've been showing a pretty good performance, and it started to become more and more popular among the investors. And it doesn't mean that one ETF is actually better or worse than the other ETF we just talked about. They're just different, and it's just two ETFs that you might want to consider. The alternative approach to dividend income portfolio is actually a growth portfolio, and instead of focusing on passive income in terms of dividend payments, you're gonna be building a growth portfolio and getting to a bigger number at the end of the day. And if say you plan to retire at the age of 60, 65 or 67, that number is gonna be even bigger. But there is a catch. When I just started with investing, I mainly was focusing on the growth investing, and I actually didn't like it because I couldn't see the results of my investments on a regular basis. Because with a growth portfolio, you're only going to be seeing the results whenever you sell your stocks or ETFs. Where with dividend income portfolio, you're going to be seeing this regular dividend payouts. The other pretty big downside to the growth portfolio is market downturns, when one big market crash can actually vanish most of your investments. Of course, if you can hold out your investment and do not sell those, a couple of years later, you're going to be fine. But if you can do it, right? Because it is very hard emotionally to stick to your investments whenever you see this 50%, 40% drops on your investments. To watch your investments fluctuate, especially in the beginning of your investment journey, might be very tough for you. But if you can withstand that and you can hold to your positions and keep investing even more during this market downturns, then the end result can be very rewarding. And some of the growth ETFs you might consider adding to your portfolio if you are a growth investor, gonna be XUU, which is the total US market ETF that has around 3,600 stocks in their portfolio, which is a great diversification from start. The current share price of this ETF is around $40. It's a pretty good entrance for new investors for sure. And the growth they provide is around 13% per year, which is a pretty good considering you are invested into 3,600 stocks at the same time. Another ETF you might consider, which is a VFV ETF, which tracks the performance of the S&P 500 on the US stock market. This is very similar to the XUU, but it has less stocks and tracks more of a bigger companies in their portfolio, and the performance of this ETF is very similar to the XUU as well. And the other one, if you want to track the Canadian index, the Canadian stock market, and Canadian S&P 500 index, is XIC, which has a very similar performance, and it holds just the best Canadian stocks in their portfolio. And at this point, you can pick one of them and you're going to be set for the rest of your life. Nothing else is basically needed here. To sum that up, if you want to go with the passive income dividend investing portfolio, you can go with XDIV or VDY ETF, or if you have the nerve to actually withstand all the market conditions and market crashes and all that, and you want to build a bigger end result portfolio, you can go with the VFV, XIC, or XUU ETFs. And the key part here is that to invest regularly to one of the ETFs I just mentioned here, and you're gonna be set for the rest of your life. But you can actually go one step further. The second very important part for a minimalistic investment portfolio is actually investing internationally, going outside of North America, outside of US and Canadian stock market. And let's face it, if Canadian or US economy collapsed for whatever reason, you still want to be exposed to international market. So your investments keep growing and keep making you more money. And if you want to be exposed internationally, one of the ETFs you might consider adding to your portfolio is VIU or VEE for emerging markets. And either one you're going to choose to go with, you cannot go wrong with it. Personally, I'd invest and I like VIU because it just covers the broader market. And the next logical question is going to be, how much money do I need to put into US, Canadian, international stock markets? The rule of thumb is going to be you can go whatever. You can go 60 to 40, 60% Canadian and US and 40% international. You can go 70-30, 80-20, 90-10. Personally, I like the approach of investing 80% into US and Canadian and 20% international. So now you have Canadian, US, international markets covered. And what else do you need? You probably don't need anything else, but you can go even further than that. You can invest into bonds. It is not a required part at all. Generally, bonds provide you less returns over time, but they're more secured, they're more safe. And one of the bond ETFs you might want to consider adding to your portfolio, if that is something you want to do, to, for example, de-risk your portfolio, is VAB by Vanguard. This ETF provides a return of around 3.5% per year, and the MER is also on the lower side at 0.09%, which is great in terms of the fees. And it's very safe for a short-term period for sure. So at this point, we're covering the entire world. Your portfolio actually captures every single market out there. You're very well diversified. You're investing into thousands of companies at the same time. We're just holding 3 to 4 ETFs in your portfolio, which is great. You don't have to spend a lot of time and energy to manage your portfolio, which is great. And if the world economy is going forward and moving along, then your money is going to be growing and moving along with it. And now let's say you have hypothetical $1,000 that you don't know where to put, where to invest, and what to do with it. And you don't want to manage a lot of stocks like I'm doing and have your portfolio hands-free and automated. You may want to put $400 into XUU ETF, another $400 into VCN or XIC ETFs to cover Canadian stock market, and the rest $200 put to international stock market, for example VIU or VEE. Or if you're a passive income guy like me, but you don't want to deal with a ton of stocks, you don't want to manage all this dividend stocks in your portfolio, you may want to invest $800 into XDIV ETF or VDY ETF to start getting this dividend income, and the rest $200 again into international stock market into VIU ETF. And see, investing like a minimalist doesn't have to be complicated. This video though was a little bit more complicated than my other videos and it has less jokes than my other videos. I can take it, that's fine. But I wanted to make this video to show to myself when I was a 20-year-old guy. So enjoy your week and I'll see you around. Cheers, bye.